So here's your April 2023 update on the best savings accounts for your money right now. Before we get into the best easy access, notice, fixed, limited access, ISAs, all of that kind of stuff, as I always do in these updates, do you want to quickly give you a couple of headlines? First of all, rates will change. You might be watching this a little bit later and some of the accounts might not longer be available, or maybe new ones have come along. So if you want to get the most recent update, head over to the blog, becleverwithyourcash.com/savings. That will take you through to the page I update on a daily basis, often 2 or 3 times in that day, to make sure any new accounts that have come along are showing there so you can get the best options for you. That also has a longer list than I'm going to be taking you through right now. There is no way that I could possibly go through every single savings account. So often you guys are leaving me a comment, what about X? What about Y? If it's not one of the top paying accounts or it's been around for a long time, that might be why I've not mentioned it. Doesn't mean it's a bad account, doesn't mean it's a good account. It's about an update for you, letting you know what changes have happened and the highest paying ones at the same time. Now, the last headline to give you before we go into the different accounts, if you saw my video from a few weeks ago, the Bank of England did raise the base rate from 4% to 4.25%. And that has, surprisingly, as you'll see as we go through some of the accounts today, has seen some of that being passed on quite fast. Normally, it takes a while for these increases to trickle through. But actually, even on the day, a few banks were saying, look, we're going to increase our rates to this after that base rate hike. Now, a couple of things you need to bear in mind here. One, just because there has been an increase in the base rate, it doesn't mean that your bank will be increasing your savings rate at all. So don't just assume because the Bank of England put stuff up that your bank has done the same. It probably hasn't. Most don't do that. And then if it has increased something, don't assume A, they've passed on the full amount of that increase at full 0.25 percentage points, or that your account can't be beaten. Have a look at your rate. If you can't remember what you've got, go into your account, have a look at what your rate is right now, and then compare it to the ones I'm going to tell you about in this video. And let's jump into it, shall we? Let's start with easy access accounts. So this has had a fair amount of movement actually just in the last few days. In fact, as I said, the day the base rate was announced, a couple of banks even put their rates up that day to quite competitive ones. But let's start with the top, and this one is one that's been around for a long time. I don't normally include this in easy access because technically it's not really easy access because there are restrictions, but it is a popular one. You guys are always saying, what about this one? So just a heads up again, haven't forgotten about it. The Barclays Blue Rewards Rainy Day Saver pays 5.12% on balances of up to £5,000. Anything above that, including the interest you'll be earning on that £5,000, will be earning a much lower rate. So you only really want to have 5k in this account. Again, I spoke about this in more detail when it launched last year. Headline though, you have this, to get this, you have to have a Barclays current account. Now, Barclays current account has to have the Blue Rewards add-on, and that Blue Rewards add-on has a £5 fee, which is wiped out if you have 2 direct debits coming out of that account and you pay £800 into the account every single month. And when I say wiped out, it's actually a separate payment into a separate account that you need to move over. So it's a little bit complicated, and some people might go, I can't be bothered with this. But if you can be bothered with it, you cannot beat that rate of interest. Now below that, the next best one, and this is a change from last month. Last month I said, I think they'll probably do something, and they did. Chip now offer 3.4% interest on their easy access account. There is up to £85,000 you can put in there, which will be protected. As I said in my video the other day, there's no reason to have more than 85k in any account. So although you can see here, some of them will do higher amounts, 250k, 1 million, whatever it might be. Let's focus on the 85k because that's what's important. So there's no restriction on that balance. Anything you want to have in chip, 3.4%. You cannot beat that right now. Below that, and this increase happened just last week, was Zopa, 3.34%. So a little bit below that, a smidgen below that one. You can increase this slightly, as I'll show you in a moment, with notice accounts within that Zopa account. Next one down, another increase we've seen is Kroo. This is a current account that launched, they launched interest on the accounts late last year. Again, near the top, they were within 3%, 3.33%. And then below that, we have our Rayan, also about 3.3% there. That is a Sharia account, compliant account. So if that's important to you, that's a really high paying one there, although a high minimum of £5,000 you need. Then we have Secure Trust Bank, also at 3.3%. If you want a building societies, as I often tell you about, they are good options if you're worried about the ethics of your savings accounts. Then Family Building Society currently offering 3.26%. I don't imagine that one will stick around for long, so if you're interested, I would grab it sooner rather than later. And also at that same rate, so I've included here, Shawbrook Bank, 3.26%. Now, the Shawbrook one's an interesting thing to tell you about because this rate here is a new issue, and there's something to be aware of when you have an account and you see the rate has increased. So maybe you've got a Shawbrook Easy Access account. Doesn't mean they've actually hiked your rate. A few other banks do this, not all of them, but some of them do this. They've put a new issue out. So you'll be still on the old rate. To get this new rate with Shawbrook, if you want to stick with them, you'll have to open up a new savings account, the one that offers this rate, and then move your money across. So again, like I said, check the rate you're getting on your account. Even if I tell you about a rate is X or Y, just check that you are getting it and there's no action you need to take. Now, not including this little table here, as I said, more of them will be over on the blog, becleveryourcash.com savings. A couple other hikes worth sharing with you, just in case you don't really want to move your money around. These are popular accounts. Monzo has increased it to 3.2% from 3%. Again, I think if you like Monzo, you've got Monzo, that's a really good option. That is in a separate account, not in your main account. It's in one of that special savings pot that you have to open. Chase has increased from 3% to 3.1%. So again, you might think, happy to go with those ones. Also, the Santander eSaver, which was quite a popular one maybe 6 months ago, maybe less than that actually. High top of the table at the time, but got pulled after a while. Still open to existing customers. They've increased that rate to 3.25%. So if you've already got that one, no newbies can't get it, but you will have a not too bad rate, not top of the table, but not bad rate to be considering. Now, one last thing to tell you about an easy access savings rates here is a lot lower, but it's worth mentioning it. And this is going back to Chase Bank. As I said, there's savings accounts, which you open up from within the app as separate accounts. That's now increased to 3.1%. But they've also, from the start of April, introduced interest on your main current accounts itself. This is the one where you make your spending to earn that 1% cash back on your debit card and things like that. That now earns 1% interest. Now, again, that is a lot less than any of these accounts I'm talking about right now. But where it's interesting, where it's different to a lot of other accounts is that if you've got money in your account for spending, which you likely do in an account somewhere, the fact that Chase are now giving you 1% means you're earning something at least on all your money. Whoever it might be, yeah, Starling has a pretty low rate, but most banks don't give you anything at all on the money held in the current account itself. So it's a nice thing to consider if you're looking, if you have Chase as well, or you're thinking about using them as your main bank. Yes, you'll get less on your separate savings pot, but maybe combined, it might nudge up your return, particularly with that 1% cash back as well. Similar to an easy access account is the limited access account. And let's quickly get up a couple to tell you about here. A couple of changes, notable changes to tell you about this month. The Yorkshire Building Society Rainy Day Saver account. That from the 5th of, so from tomorrow, at the time of recording this, or Wednesday at the time of recording this, that will be offering 3.6% on the first £5,000, 3.1% on balances below that. So not a bad option, but only 2 withdrawals a year on that one. Meanwhile, the Coventry Building Society Limited Access account, where you can get 6 withdrawals a year, that has increased to 3.3%. So they are comparable with those other accounts I mentioned just now, but obviously with some restrictions as to how much money you can have in them or how often you can access the money. Right, I said I'd come to notice accounts as well because some of the rates here have increased as well. This is where you put your money in, but if you want to get it, you have to give a certain amount of time before you can get it. These are just the top paying ones. There are many more over on the blog, but Synergy Bank has the highest paying 120-day and 95-day accounts. You look at 3.65 and 3.6% respectively. Or Zopa, which I mentioned before. I said if you put your money in a sub pot with notice given to it, you get more on top of that 3.34% standard rate. So if you want to give 31 days notice, so just a month, which is not too bad, it goes at 3.45%, which does beat Chip. And also, if you want 7 days notice, 3.38%. Again, you might have to manage your money a little bit for this, but it might not be a bad way of increasing what your return just a little bit. But again, we're talking small margins here. It might not be worth it if you just want to slap it in one account. It's not huge amounts of money and just let it do its thing rather than faff around. The time you spend might outweigh any benefits that you get. Let's do regular savers now. Not much change here. Top of the table, still First Direct, 7%. Up to £300 every single month. It does require a First Direct current account. Don't forget £175 for switching into them as well. So that's a nice little combo of deals there. Club Lloyds, 6.25%. I know it says 6.26% there, but 6.25% if you have a Club Lloyds current account. Does require that current account, but you can put more into it every month, £400. Halifax or RBS, you can have both of these if you've got a current account at both of them. 6.17%, max of £150 a month, but that does not expire after a year. But the new one to tell you about here, or the increase to tell you about here, is Halifax. Their monthly saver pays 5.5% interest. And what's good about this one is you don't need a current account. So let's say you've already got one or two, but you don't want to open a new current account just to get this, although the Halifax current account is pretty decent, the reward one in terms of the perks you get. You can now open it up, put up to 250 quid every single month and get 5.5% return. Right, let's do fixed rates now. And last month I told you about how surprisingly we'd start to see them nudge up a little bit, even though we kind of thought was from analysts out there that because the base rate peak had been seen as much different to what they expected to be coming this summer, we wouldn't see any more increase. In fact, we'd seen a gradual decline since October, started to go up, and they've continued to go up. And as you can see here now, you can get some pretty healthy rates across 6 months, 9 months, 12 months, 18 months, and also 24 months. Top paying one for 6 month fix right now, United Trust Bank, 4.04%. Bank via Rayan, 9 month fix at 4.1%. My Community Finance, which is a credit union, 12 month fix at 4.52%. Rayan, again, this is mentioned before, this is a Sharia compliant account, so you get expected profit rate rather than interest. That 18 months at 4.57 and 24 months at 4.62. There are many other options all listed at becleverwithyourcash.com. But if you are considering a fix, they are the best paying ones right now, and it's the best we've seen since they started to decline last October, November time. And let's end on ISAs. Obviously, I did a whole video looking at the best ISAs just a few weeks ago. We are now, time recording this, right at the end of the financial year. So you might struggle to find ISAs that will let you put money in still before that deadline, often around sort of 5 p.m, 6 p.m. on the 5th of April, maybe, which is Wednesday, maybe even shorter than that, maybe already gone. But these ones should hopefully still be letting you pay money in at the time of recording or from the new financial year on the 6th of April. Look at one of these. Now, the top one here to tell you about, not many of you are going to be able to get it, but if you have had a Yorkshire Building Society account of any kind for more than a year, they have a Loyalty 6 Access ISA. The first £20,000 saved will earn 4%. Anything above that, 3.5%. Again, how can you have more than 20k, you're saying, in an ISA to earn 3.5%? You can obviously transfer money in from previous years. Next one, Santander, their Easy Access account is 3.2%. Santander also leading the way on most of the fixes. 4.15% on their 12-month fix, 4.25% on their 18-month fix. They're 4.2% on their 2-year fix that can get beaten by Virgin Money. However, and again, it's going to be tight to do this, but you might still have time before the end of the financial year. If you open up a new Santander fixed ISA, fixed cash ISA, and transfer £10,000 or more from a different ISA, they will give you a £50 bonus. But you're going to want to be getting onto that pretty soon because you're going to struggle to do that the closer we get to the 5th of April. Now, you might be thinking, hang on, where are some of those ones you told me about in that ISA video you did a few weeks ago? Sadly, some of them have now gone, such as the Barclays one and that Virgin Money 1-year fix at 4.25%. They have gone, but obviously there are similar ones here. Again, more of them are listed over on becleveryourcash.com/savings. My name is Andy Webb. Thank you so much for watching. I'll be back with another update later this week, this time looking at the latest current account news and offers, so make sure you check that out. And in the meantime, check out these videos right here for more ways to get the most from your savings.